On this week's episode of the Investors Corner, me, Mike and Ian will discuss how rental payments could boost your chances of getting a mortgage, and a whopping 76% of Brits believe it's time that banks took those payments into account. We're also talking cash. With interest rates looking good, 35% of you are leaning towards savings accounts as your investment of choice. But is it really the safest bet? We'll take a closer look at the property ladder as well. Now, despite a market slowdown, residential properties are still go-to investment. But how do they stack up against commercial spaces in today's economy? And for those of you that like living on the edge, we're discussing cryptocurrencies. They're in the top 6 investment preferences, but still trail behind the leaders. So we'll discuss the mixed feelings surrounding this volatile investment. So make sure that you stay tuned, make sure that you listen in, and make sure that you subscribe to the Investors Corner podcast.
Welcome to the Investors Corner podcast in our new studio setup. Mike's got the cushion.
Got a cushion.
Andy's got the lamp.
Got the lamp.
I've got the... What is it, Mike?
Clapperboard.
Action clapperboard. And this week we're going to have a very relaxed conversation. Hopefully it goes to plan in the new studio. About 3 things. Would you two like to know what they are?
Yeah,
that would be handy.
Yeah.
So I'm going to talk about tenants and mortgages. That's going to be one of the things. I'm going to ask you the questions. You're going to give me answers, and then I'll tell you whether I agree or not. It's typically how it goes. Then we're going to talk about what the Brits feel are becoming the most appealing top 6 places to put their money and invest. Okay. Recent survey from YouGov. So we'll see how that comes out. And we've got some Zoopla data on buy demand so far, year on year, number of sales agreed, new listings, and how Andy is finding the rental market in Q2. Now we're in Q2. And anything that Mike wants to say that will help us go a little bit viral on the short-term clips.
Is that why I got the armchair?
That's why you're in the armchair.
Cool.
So, Andy, over to you first of all. There's a study and a survey that's come out that basically says 76% of Brits feel that tenants should be able to get improvements on their mortgage for paying their rent. So effectively using the rental payments towards either a credit rating or in particular in towards the underwriting to effectively get a higher mortgage approval. So I don't know, if you're a bank and you're thinking, right, I've got someone that's lived at home for the last 5 years, it's got a 10% deposit, same earnings, versus someone that's been in rental for the last 5 years, same deposit, same earnings. Surely the bank should see that that person's been paying their rent as long as they have on time, and that should be improved. But at the moment, there's not really anything taken into context there.
Yeah, which is strange because, like you said, if they can demonstrate for a certain period of time, so say they've been renting for 24 months or 36 months and they've always paid their rent on time, you can see that transaction happening. And, you know, you've got a reference there saying that they've always paid rent on time. There's never been any arrears or anything like that. Then why wouldn't you consider it to potentially buy a mortgage? It just makes sense that you should. I mean, we had this thing with the 99% mortgages, didn't we? And they were potentially looking at that period of time with them paying the rent and then getting a mortgage on that. So yeah, I think more banks need to look at it. It should be looked at. I don't see what the issue with it, is not being looked at. So yeah, I mean, I can understand.
And Mike, do you think if it was something that was in play, if it did go very much towards getting your first mortgage as a first-time buyer, you've been in rented, like Andy says, the last 36 months, if that was part of it, do you think there would be less tenants that are running the risk of not paying their rent on time? I know we're in a different market, but if we look at the last 20 years as an average, do you think there's more incentive for that tenant to make sure the rent is paid, knowing that it potentially is going towards the bigger goal of getting a mortgage?
Yeah, I think so. If it's going to affect your credit score or affect your affordability, you're going to make that decision of not paying that last month's rent to make the deposit make it up, or play some silly game with the landlord or the checkout clerk in that sense. The one thing I just don't understand on mortgage approvals, and I'd love someone to inform me, is why they don't just use open banking to figure that out. Why am I still sending my bank statements through my mortgage broker to the underwriter for them to decide whether it's right or wrong? Why don't you use I'll give them authority to use open banking, and like you say, they can then check through. They say first of the month, every month, rent's been paid. The rent's £2,200 a month. The mortgage is only £1,500. This is an open and shut case.
Yep, that's as simple as a mortgage offer should be, really.
Well, if you can afford more on rent than you're going to be paying on a mortgage, which typically it is, I know it's quite even at the moment, but over the last 14 years, rent's been in excess of a mortgage. Why isn't it that? Because that you're looking at the ability to repay to keep a roof over your head.
Yeah.
So yeah, I've got the proof that I've got the ability to pay to keep a roof over my head. Thanks. Well,
76% of Brits want it to become part of how tenants can get a mortgage, obviously.
And 24% didn't understand the question.
Probably, yeah.
I think what maybe would help is, like, with mortgage payments, they get uploaded to your credit file and you can see whether you've got a missed payment or not. There needs to be something in the middle that if you do rent, then those rental payments get uploaded to your credit file and it's treated like a mortgage payment, essentially. I know there's a few companies out there that do it where exist, you can work with another company where you send a rental payment sheet through and they can upload that to the credit file of that person, but you don't really hear a lot about it. So maybe that's something that could be done to make it easier to lenders, where they can see, that whole period of time when they're renting, instead of relying on, bank statements or rental payments references and all of that sort of stuff, just so it's all automatic.
Well, this is quite a large survey, thousands of people, but in this room we're going yes and yes. So that's 100% of the room.
Sense.
76% of Brits, like you say, potentially 24% that didn't understand the question. There's another big survey talking specifically to Brits about what investments they feel are becoming more appealing, and then they basically had to select one of about 15 different choices, which is quite interesting because it means it's not like you've just selected multiple choice. You've really had to narrow down the one that you think. And I'm going to do this in no particular order, but what's the game where you have to guess if it's in the top 10? Is it like Family Fortunes?
Yes. Yeah.
Do you two want to shout out two that you might think could potentially be in the top 3? I'll let you have it. I'll go one and then one. Mike?
Pension.
Okay, no, not in there at all.
What was the question again?
Oh, wow.
You're in the 24% of the last question. Right, types of investments that Brits feel are becoming more appealing. So where you would put your money, effectively. So pensions wasn't on there.
Crypto.
Crypto is one that I've got for you in the top 6, but it wasn't top 3.
Okay.
Mike?
ISAs.
Should we include that in savings?
Yes, if it gets me the right answer.
We'll say yes, it's in the top 3 then.
Thanks.
Property.
What type of property? Residential, commercial?
Commercial.
No.
Residential.
Yeah.
Right, let me. As I said, ISAs. I thought it was a bit embarrassing. None of us have said buy-to-let yet.
Yeah. I thought that was going to be the straightforward choice. Right, I'll go from the bottom. So 2% said commercial property. Now there was 16 different choices. There's all sorts of things like
monkey pictures.
Yeah, like anything in there random. But 2% said commercial property. I put that on there because it wasn't the top 6, but I thought it was quite interesting because we spoke a lot about that. But people are not seeing that as one of the things that look appealing in the future, which is interesting. Is that because of the death of the high street, maybe, or work from home?
It's never been the norm. It's a specialist investment category for whatever reason, isn't it? It's not like people just don't understand it.
I think that's it. It's the educational piece side of things that the majority of people don't know about it or what it covers.
If you drive around high streets, you just see them available everywhere. I think maybe that gives people that vibe that it's a bit worrying.
Drive around towns, you see for sale boards outside houses everywhere, in fairness.
Yeah, but people are in there, living in there. These are
True.
like big units where people have spent millions of pounds with diggers and all stuff going on for the last 2 or 3 years. Yeah, I mean, you just see them, don't you? Just diggers just going around, just moving soil around, but no one ever goes in there.
Just money laundering happening.
Just moving it from like one side of the unit to the other side of the unit. It's crazy.
Refurbing a building just to refurb it. Yeah.
You said crypto, 4%. Low.
4%. I'm surprised at that because there's a lot of buzz around crypto at the moment and how it can make you money quickly compared to other investments. So I would have thought more people would be on that. But I think it's high risk, isn't it? You've got to know about crypto and all of these altcoins and all of that sort of stuff to really understand it. And maybe if people understood it more, then they'd put more.
Did I hear that in 2024, if you'd have invested in Bitcoin in particular in December, that you would have added 50% to your investment after Q1 of the year?
Yeah,
the bull run.
It was down to about 20,000, wasn't it, at one point? And then it went up to, 50.
That was me doing the bull. Yeah.
Missed that. Sorry.
I'll do the running on the weekend. Okay. Yeah, I think it's a fair point. What do you reckon, Mike? Crypto. Your bag?
Not currently.
How much you got in there?
None. Zero.
Have you thought about it though, you two?
No, I've thought about it. I would love to understand it, but I just can't get it in my thick head. Genuinely what it means and what are the risks and why is it that someone can't just close the entire thing down tomorrow? I just can't get it through my thick head. I'd love to, but I can't. And I won't invest in something that I cannot understand.
You're starting to see a lot more banks as well investing in crypto. You know, like JP Morgan, like people like that are piling in the cash to buy Bitcoin and all that sort of stuff. So if they're doing it, there's something there, but like Mike just said, you really have to understand it because you could lose everything within an hour.
My thing is around currency. Like if we go back through the history of mankind, at the beginning it was trading. You know, you grew apples on your trees and I grew potatoes, which meant I could bargain with you. That was the start of it. Then currency became a thing 1,000 years, 100 years, whenever later. And if we look at it now, currency is still the thing. I went to Tunisia on holiday less than a month ago. You can't get Tunisian money outside of Tunisia, and you can't take Tunisian money back out of it. So effectively, when you get to Tunisia, the rate of exchange is the same everywhere. There's no fees to withdraw it, but you have to get to your hotel, go to the cash machine, withdraw the Tunisian money out, and then before you leave, you have to make sure you spend it all. It's quite clever from their point of view, to be fair.
The currency isn't stable enough for the money to be all removed from the country.
Yeah, and then if you look at obviously what's gone on with the pound and the euro, and you look at the dollar, etc., is the next level at some point in our generation not that there is just global currency, which could be Bitcoin? Is that not just the logical way of looking at it from a bigger picture that at some point...
Sat in Britain that voted for Brexit. Good luck with that.
I didn't vote for Brexit.
No, neither did I.
But I'm
as
just
a nation...
But that surely is just the logical thing, right?
We didn't join. We kicked ourselves out of the EU. So the chances of agreeing on a common currency, however joined up, and
Labour are coming in next. You know, anything could happen.
I'll put my money on it. It's not happening.
So I'm wearing my pink top today. So you know, I'm not saying I'm voting Labour, but that's the logic, right? That's going to happen. So yeah. Right, the next one, we've done well. We've got the bottom two. We went commercial property and crypto, and then we deviated. Global stocks and shares, 11%. UK stocks and shares, 16%. Interesting. We feel more comfortable in our own country stocks and shares than we do globally. Only by 5%, but maybe it goes back to being risk adverse. You feel more comfortable with what you know is going on around you. Then you've got residential property at 19%, so just above those two, nearly 20%, 19% of people feel that's a good place and that's becoming appealing. And by far and away, over a third of the people, 35% of the people, the number one place to put their money that's becoming more appealing for Brits is cash and savings. Putting it into their savings. So 35%. Do we feel...
Yeah, why would that be, though? You're getting better rates on savings now?
Well, yeah. You used to get, 0.1%, and you can now get 5 on an interest.
Okay.
Sorry, it's an instant access savings. So your 1 year fixed rate bonds, 2 year bonds, you're getting, in inverted commas, really good rates. So your money's probably standing still in truth.
I can't remember who we asked on a recent podcast, but we said, if you had 100 grand, where would you put it? Might have been Matt and Ovi, actually. If you had 100 grand, where would you be putting the money? And if you actually look at it and think, right, if you've got 100 grand, if you just slapped it in a really decent high interest savings account, could you make more monthly profit on that than if you put it into a buy to let? Is the real question, isn't it? If you put 100 grand deposit down, you've got to take into context with 100 grand that you got to pay some stamp duty, you got to pay some fees, etc. So we put 100 grand, we lose a little bit of it in fees, and then we put it in a buy to let at 250 that you're going to get, let's say £1,100 a month rental on. That mortgage is probably going to sit somewhere around
short term. You'll do better out of putting the money
savings.
If you're only going to do it for a year, then you'll do better in savings, like I say, because of the cost to get in and out.
But you see the property market do a jump because inflation's gone down, and all of a sudden the Bank of England base rate drops, and you see that 250 property drop to climb to 280. You just made 30 grand in 9 months, which can very much happen. Well, that's obviously the win, isn't it? That's the difference.
You can make 25k overnight just because of demand and supply.
Yeah.
If there's suddenly nothing available, your house is worth £25,000 more overnight in the southeast.
Yep.
Yeah.
So what would you two do? 100 grand. Crypto, commercial property, resi property, stocks and shares, UK, global, or an ISA or savings? You're going crypto, aren't you? You crazy animal. Yeah.
I think I would.
See it in your face, yeah.
I'll just...
Bitcoin or it's something random?
No, I wouldn't go Bitcoin. I'd probably go the smaller altcoins. So because when Bitcoin goes up, those tend to increase as well. So I'd like to try and find the next one that you buy for a penny and then it goes 1,000x. Risk it. Why not?
You'd split the 100k.
Yeah, I'd go over different
100
ones,
different types.
Yeah,
put £1,000 in each.
Yeah, see what happens. Why not? Risk it.
Mike, you doing the same?
No.
Still doesn't understand it.
I still don't understand where I still don't get it. Bitcoin traders, come on, there's a spare seat.
Yes.
You're very welcome.
Yeah, come sit here.
The smart man spreads their bets and puts 20 in the top 5, don't they? I just doubted myself then. Is 20 times 500?
Yeah, you're right. It's safe on
the smart man puts a little bit in everything. The one thing that is not on that list is business. Right? You're putting £100,000 into a business. It's not very entrepreneurial.
Yeah, if you're skilled in a certain subject.
Because I'm in the space at the moment that if I had £100,000, I invest in starting a new business.
Or would you invest buying
or acquiring a current business?
Yeah, I mean that's a good point actually. I'd like to do that. Yeah, acquire the business, get more from it. That's a good investment to make. Yeah, I'm surprised that's not on there.
Well, we've spoke about demographically where the retirement age sits at the moment. There's more 65-year-olds than 18-year-olds for the first time statistically on record. So if you're 65 and you want to retire from your business, I've got 2 guys here that are interested in purchasing. If you want to come Dragon's Den style, it's got that sort of vibe now. We get more of these tub chairs that Mike's in. You can even have a Fanta on the house. What
would you do then?
What would I be doing?
I mean, you dabble in the stocks and shares and all that sort of stuff, haven't you?
I got a crypto wallet. I've got a Hargreaves Lansdowne account. I got residential property buy to let.
Have I just called you the smart man?
I feel like dirty.
And obviously I've got a high interest savings account. So the only one I'm not on at the moment is the commercial property, which obviously we're looking for.
Trying to get you there.
Yeah. then I can
Not
get
interested.
I can get my Scouts badge on all of them. Actually, at that point, I stitch that to my sewing trunks, and I'm winning.
Nice.
So I don't know if I had 100 grand, I would probably say at the moment the area that I quite like is the global stocks and shares vibe. I sort of feel that I can strategically do better with that 100 grand at the moment in that space over the next 5 to 10 years than maybe I could in some of the others. But that's because I want to improve that pot. I've got money in the other places. I want to improve that pot of mine so that I do have more eggs in basket. So that would be potentially what I'd be looking at the moment. So There we go. Right, Zoopla data. Banged it out of my email box this morning. I thought, why not chat about it with Andy Mike on the sofa with our cushions. For those of you that are listening and not watching, check us out on YouTube. You'll see it's quite fancy now. Buyer demand up 4% year on year. Nothing crazy, but buyer demand is up 4% year on year. So stability, shall we say?
Up 4%. Now, it depends how you strip the statistics. It's quite a lot of people.
And it was also down quite a lot last year.
Yeah. Well, there you go. Again, doubly depends how you strip the statistics.
Depends how you play with it, yeah.
4% of buyers is a lot of actual people.
Yeah, in terms of investors looking, I've probably seen level. I definitely haven't seen that sort of increase in regards to buying another buy to let. If anything, I've seen people wanting to exit more and sell their buy to let. But obviously, we've got outside factors on that. I'm not going to mention it again. The Renters Reform Bill. We'll save that for another chat.
Save that for an election.
Yeah.
Okay.
Do that one on my week off, Andy.
Yeah.
But yeah, in context, there's a lot of buyers looking, so 4% is a fair margin. This will influence things a little bit more. The number of sales agreed is up 12% year on year. And that is a sizable amount, isn't it?
That's a massive difference, yeah.
If that was inflation...
Those 4% are good buyers.
If that was inflation, then the press would be setting fire to everything.
Yeah.
Can you see what those percentage of first-time buyers or current homeowners?
Yeah, I mean, if we just look at outside of London, home county sort of vibe, statistically at the moment, if you've got the first time and second time buyer markets, they're pretty active. Still, the dip is in the more mature families that are upsizing. And by more mature, kids that are teenager level and parents that are in mid 50s to late 50s. There's still less of that on the upsize because they all jumped on the bandwagon with the 15%, 15 grand stamp duty saving. So that's not like, they will sell, but they're not like crazy in demand. And from a pricing point of view, they probably jumped up the most and then last year went down potentially the most as well. So they're still finding their feet. And then the kind of the higher end of the market, the sort of super prime, if you like, is pretty active from conversations I've had with people that work in that space. So yeah, I mean, typically speaking at the moment, 12% is decent. And I think if a property is well priced with a good agent, it sells. If you've got neither of the first two, then you won't be moving. Basically, if it's poorly priced and poorly marketed, you're not moving. So that would be my sum up. Mike, what's your thoughts? Any different to that?
No, not at all. I think it's absolutely fair that those people who just want to, inverted commas, try the market will try it, leave the house on the market for 12 months, and then tell you it's quiet, which it isn't. If you want to move, if you've got an aim or a target or a house that you want to move to, you will make it happen.
And for the investors out there, we had Pete Lickerinas come on and he was talking about now's a really good time to take advantage of opportunities that may be there where people need the opportunity taken advantage of. And there's a 14% increase in new listings. So there is more properties available for people, which I think because, and I haven't got this stat on here, but I know it's 20%, the amount of stock that's actually for sale higher than this time last year. So there's 20% more properties to choose from and a 14% increase of properties coming to the market. So there are deals out there. There's good priced properties out there. There's motivated sellers. And if you're an investor listening and you're thinking actually residential, I'm in that 19% bracket of people that see that as the most appealing and you're just getting your financial ducks in the row, well, there's more properties out there. So I think that's where, you need to talk to someone like yourself who you, Andy, can obviously help these investors spot the opportunity when you've got the knowledge that Rightmove doesn't tell people.
Yeah.
That's the big difference.
Yeah, looking at Rightmove, especially last week, seeing properties on there where they're at a decent price, you can get decent rental on it. The yields that I was seeing on these properties were around 8%, which nowadays for a buy to let is good, isn't it? Normally you're looking at 5 or 6, but yeah, I probably saw 3 properties last week that were giving that yield. So they're definitely out there. It's just you need to talk to the right people to spot those opportunities, and get stuck into adding to portfolios or going in it for a first timer. If that's where you're putting your money and you're in that 19%, it's definitely worth doing. But you've got to speak to the right people to spot those.
Do you want to talk about the renters reform a little bit?
No, please.
How are you finding things in general, though? Talking to landlords as you are, you mentioned about exiting, but we're into Q2. Easter holidays obviously out the way now, where it's meant to be spring, but it's pretty bloody freezing out there. But in terms of the general chat that you're having with the season pro landlords, what's the general feeling in the air?
Yeah, the season pro ones, they're looking to add to their portfolios, right? So it's normally the landlords that maybe got 1 or 2 properties where they want to sell their assets off because they're hearing the external noise that's coming through that they think is detrimental to their investments because of everything that could potentially come in. The seasoned investors are just cracking on with it. Me and Mike spoke before that 24% of landlords are looking to sell their buy-to-lets and their portfolios, and then you've got 24% of portfolio landlords looking to add to their portfolio. So sort of cancelling each other out. There's still a fair bit of property that I've seen that's on the market. The properties are staying on for a bit longer than they were before. Rental prices have sort of decreased a little bit from where it was 6 months ago. We've seen the inflation rate come down on that, but you're seeing good buy to let mortgage rates as well. We've seen 4% now, something like that, just under.
There's a few under, yeah.
Yeah, a few under, and that's based on 75%. So yeah, I mean everything's ticking along, everything's good. It's just you've just got to hope that it continues on and people spot these buy-to-let investments that are out there and they don't get scared off by silly people out there trying to put a negative spin on buy-to-lets. And I think what's holding it up is obviously the general election. Some investors that I spoke to aren't looking to add to their portfolio until the general election to find out if Labour does come in, what are they going to do about the renters reform bill, because they're the ones that are saying from day one they will make sure it's implemented and all of that sort of stuff. And look, the thing is that investors feel like they are losing control of their investments, and that's what's making some people exit. But like I said, you've got others that want to stay in and just going to crack on because they've got the experts around them that they can navigate through this reform if it ever comes in. So yeah, I mean, like I said, it's sort of business as usual, really.
Yeah. Talking season pros, I met one of our listeners actually in the supermarket this weekend that flagged me down, that listens to it. So Duffy, if you're listening, shout out to you. Yeah, thanks for listening. I think that's his
Duffy.
nickname. Yeah, but yeah, good to hear that people are actually listening to us and flagged me down. I was unbranded as well, so there we go.
It's those eyebrows.
It is, yeah, they are dumb. He listened, he said, rather than watch. But so yeah, shout out to you. As we're in a new podcast setup, I thought we could add a new tradition to the end of the episode.
Right.
When I said that, Andy's eyebrow was twitching with fear.
Yeah, I'm not going to.
So
Not the only bit of him that was twitching.
So I'm gonna bring, because I'll start it off because it was my idea, and then I'll pass the baton to one of you two.
Right.
But I found 2 random stories that don't relate to investing at all, but maybe you could put some sort of random link on it. So the first one is Prince Harry's Meghan has just released her own branded product, the first one since coming away from the royal family. Does anyone know what it is?
No.
I do.
You may know.
Yeah.
What is it, Mike?
Jam.
She's released her own jam. That's
That's
random,
it's
isn't
April
it?
the 1st. It's true.
That's
Jam.
random. Yeah.
That is very random.
Meghan's Jam.
Obviously,
I don't think it's
nothing
called that.
else better to do.
Well, that's where she's invested her money. Jam is not in the
Jam.
top 6, Meghan.
Jam's not in the top
Jam.
six.
How much is it selling for?
I've no idea.
How much is a pot?
Pricey, yeah.
A lot, yeah. But you could get that on some scones. Are you going scone, jam, clotted cream, or are you going scone, clotted cream, jam? This makes...
Scone, jam, clotted cream. You got to have the cream on top.
Jam first?
Yeah.
Mike, where are you at?
Well, how are you going to put the spread the jam? It's easier to spread the jam first, right?
I go scone, then with a knife I get a good thick spread of clotted cream, and then with a teaspoon I dollop the jam on top. Am I weird, or is that...
No, well, there's a Devon and Cornwall
yeah, I'm
war
sure.
that's gone on for centuries because the Devon and Cornwall do it the opposite way.
What,
Which
jam
way's-
first?
Do you know which way's which?
I don't know. I don't want to offend anyone.
Well, which are
frankly.
you? Which one are you? Because we're 50-50 here in
Well,
the survey.
I used to do jam then cream, and then I heard
Yeah.
people do it the other way round, and now I do.
Oh, so
cream
you're
then.
you're an
Yeah.
animal. You do
Use
one
the cream.
one half one way and one half the other.
mix it up. Yeah. Because you can use the cream like butter. You can just whack it on and then put jam on the top.
Well, that's-
Because you
that's-
might.
yeah.
Some
Yeah.
people will use a spoon for jam, and some people use a knife.
Yeah, I'm a spoon kind of guy.
See, there
Yeah.
you go. Yeah.
All right, I'll try the other way.
Let me know how you get on.
Yeah.
I'll do the same.
I'll report back.
Thank you. The other
Tune in next week.
the other story was that cats like cardboard boxes.
Mm.
So in Utah, a couple lost their cat for a week, and they basically hadn't realised that in their Amazon returns delivery, they'd packaged up their cat and sent it back to the Amazon depot, and it was in there for a week.
What? Still alive?
It was still alive. It was obviously much thinner, but they got a flight over to go and pick it up. Unfortunately, it was alive. But so this is a message for everyone. If you're ever sending back your Amazon cardboard box, just make sure there's no
Check
cat.
for
in it.
Check for cats.
Yeah. So next
God, it's
week,
breaking
What's the
news,
weird,
this.
Andy? What's the weirdest thing you've ever returned to Amazon?
and on next week's episode. So next week, Andy, if you could bring 2 random stories to the podcast,
right.
that'd be great.
I'm on it.
Yeah.
Yeah.
I know we diversified a little bit there at the end, but congratulations on getting through our first episode in the new studio without the mics falling off or something falling off the wall. And congratulations, gents. We've done well there.
Thanks.